Hello guys, glad to have you on board again. Today, heading into that new week, we're gonna do as we do each and every Monday, because trading is pretty fucking far from what most people try to make you think it is, or what you may just think it is on your own. It's definitely not an exciting job or anything like that. It's as boring as any job could be. And so we're gonna do like every fucking Monday when you go down the office, say hi to your colleagues and get to do the same old boring job. This is exactly what a trader does on a weekly basis. So let's do the Monday job, discover what the market gave us last week, and make some prediction for the week ahead, defining the timings that could be, defining an intervention into swing scenarios, what assets could be interesting to watch out for, and those kind of stuff. So first we'll have a look at the economic calendar. Let's do this. This is what we're going to have. USD consumers confidence from the conference board showing up tomorrow. Today we basically have no big deals. I've just been taking high-end informations because that's all we care about for swings. We're going to have NZD, AUDNZD press conference, as well as the rate decision. So this is going to be high-end interest for AUDNZD coming along on Wednesday, sorry. Thursday is definitely the goddamn big one, because we're going to have the annualized GBP for Q4 2018. So it's been a shock for the markets at the end of that year. Let's see if it is actually happening as well in the numbers. If it does, which means if we don't even fit the 2.40, I mean, if we do have lower numbers, then it could even be triggering some panic selling in the US. I'm not saying it's going to happen. I think we're just going to fit the consensus. But anyway, it will just prove that the market is has the pricing and economic slowdown, instead of forecasting that we're going to have huge growth coming back next year, and an accommodative Fed in between, because it's not going to work. I mean, we can have both things together. If the Fed is getting dovish, it's because they think these elements might be temporary, though, but they have to assess that it's not going to be done and dealt with in just a few months from now. It's going to be longer than that if it's going to be dealt with without a recession in between, and I tend to believe it's somehow inevitable. But that's my personal choice. So obviously Thursday is going to be the big day for the week to come. And we have a few job information showing up on Friday. But definitely Thursday is the big day when it comes to US and European stocks market. But big day is going to be Wednesday for NZD and definitely or AUDNZD. So now let's see what it looks like in terms of markets. But first we cover up the cryptos. So our crypto maniacs can just move to something else if they don't care about the rest. So we can do even more indecisive than this. We're clearly at the 50% trend channel when it comes to Ethereum. If we do have a look at prices, if we do have a look at technical indicators, just once again, remember, you cannot trade when you're not in context. So in a daily chart, there's nothing to do. So for the long-term buy and holders, there's definitely nothing to care about. So you just move on. If you're a buy and holder, you don't give a shit. If you have short-term or shorter-term time frames trade, like the one I took in this area, I think there's something to forecast. In that perspective, you have no viable informations to do anything in here, which means you don't profit take, you don't reinforce, you just watch out for prices to either reach out there or there. The question is, as we're right in the middle, it's a 50-50 game, so you have to gather additional informations. This is why you'll be able to have a look at the signals to just shift the balance. But you need to be honest that you're not gonna end up with an 80-20 odds in here. It's not gonna happen. You started 50-50 regarding prices, so the signals you might have in here are just gonna be switching to what? 52-48, 55-45. That's all you're gonna get. You're just gonna shift tiny but steadily, trying to shift the balance to either the upside or the downside with additional informations. this is where we're going to get. So first you take the high rank informations, the momentum. Where is that? God damn it, at 0 and oscillating pretty randomly. So absolutely 50-50 as well in here. So prices doesn't give us a single information. Momentum doesn't give us a single information. Or at least both of them are giving us pretty neutral information, kind of a 50-50 game. So we're looking at the next step. Have a look at cycles. What cycles does tell us? They told us we were in a bullish cycle. We've ran to the potential reversal area and had a reversal. But what you see right here is that now we got bullishness coming over again, which means we are trying, we should have bears, but they're not showing up. So prices are not reacting bearish, therefore sine wave is detecting some kind of bullish breakout. That doesn't mean we broke, because prices haven't broken yet, but sine wave sees that in a cyclical perspective something's wrong. And that's an information I like. That doesn't mean it necessarily is going to break, but it says in a cyclical perspective, now this is not a 50-50. It's more likely like a 60-40 to the upside. All right, so price, momentum, and cycle would be just like a 51-49. All right, it's just two of those information, and the major ones are pretty 50-50. Just one of those is shifting, early shifting to the upside. Now we can have a look at additional informations. We could have a look at the trade line, for example. Look at the trade line. We absolutely have no bearish trade line. The last one we had was in here, and it terminated there. So the last time we had a bearish sentiment in this market was there. Now, since then, the bulls have tried to emerge. They failed each and every time, but we can see the sentiment is rising. First time it's been pretty rapid. Second time a little bit better, and this one is still ongoing. So either we fail it and we break it down, which means the bullish sentiment will just start to shrink. Doesn't mean the bears will take over, just that the bulls are shrinking their advantage. It's possible, but I don't really think it's going to happen. I think, moreover, the bulls will start to gain, which means we probably have more to come from this trade line. So, in a trade line perspective, no bearish sentiment, tiny but hesitating bullish sentiment as well in here, kind of a 60-40 odds. So I would say in an overall structure, looking at the trade lines, the price filtering, the momentum, and the cycles, I would say it's a 52-48. So it's not that big, but I would say pretty lower amounts, a little bit more chances to go to the upside. Let's sum it that way. But like I said, 52-48 is definitely not something you should put your entire fucking money into. All right, there's going to be much better odds elsewhere. But if you absolutely want to get into crypto, if you absolutely want to trade just this, and if you want my opinion is odds are to the upside. But it is not something you can trade. All right, it is something that you can assess, which means if you're already in, you just stay in, you have better chances to go to the upside. But this is not something you get in just right now, paying 50% prices. I don't necessarily think this is something that needs to be traded in a daily perspective. Just, as I said, assess risk and rewards. All right, moving to the stock market, because there is a shit ton of things to say out there. So we've already been breaking down the Chinese session and Asian session globally has been bearish as expected, minus 3% on the Nikkei and -2 in Shanghai. So breaking a support and closing at the low for Nikkei. Shanghai Composite closing at the lows, not breaking a support yet. Hang Seng is closing at the lows, but still a positive close. It's been gapping down, but closing at the bottom and holding the gap, which is important in here. We're holding the gap, but we still haven't broken support there. And if we do have a look at, oh goddamn, SPX, this is what we had for the week to close. So not pretty. Upper shadow candle closing at the lows. All right, really at the lows and back to 76% fib. So this was over stupid, and I was clear with that. I mean, that session was pretty much out of any ground, and now the momentum divergence is setting itself. So even though we had high in here, we didn't make high, so it's pretty much like the same price. But I would say, even though this isn't giving a signal, to me this day shouldn't even have happened. The liquidity structure was just as stupid as it could have been. Even the knees has gave us warnings about that session. So The total unwinding of that session on Friday didn't really surprise me. So it's a freaking strong bearish engulfing structure with a bearish gap. So we've gapped down back to resistance and fucked it up and fucked the support the same day. So it is as bearish as it could be. The weekly close is freaking ugly, and obviously we're going to make new lows this week. So it's already done, but you can expect it to happen anyway. So in a weekly perspective, you can expect this week to make lower lows than the one we've done on last week. So are we going to break 2800? Definitely we will. How far are we going to go? I don't give a shit. I don't know. All I can tell is that we're probably going to have some kind of a pullback before. So you can expect Monday and Tuesday to probably retrace up to 2830. Try to test last week's resistance. I would say 2830 is definitely something that we could try to get down to get up to. We still have higher highs and higher lows. So if we try to go a little bit higher than that, let's say 2840, that's also a possibility, but I don't really think we can do any more than that. Can we just go straight line bearish as well? Yes, we can. That's why you need to be bearish in that market and not asking yourself where you should profit take and supports to buy under resistance. If you were trading the dailies and weekly scenario, then be aware that it's just getting started. So as it may just get started, why the fuck would you profit take? So if you took the daily to weekly chart, on the daily chart, if you follow the goddamn strategy, where is the next time you're going to make a decision and you're going to risk manage? Just apply the goddamn strategy here. The next time you have to do something is at the fucking trend channel, which means in a daily perspective, there's not a shit to do until we get to 2600. So it's pretty far from the current prices, and you shouldn't even focus about prices right now. It's either you get your stop loss triggered, or we go there and you get to validate and partial profit take. So daily and weekly traders, get the fucking hell out. There's nothing to do for you right now but waiting either for the price to invalidate you and take down your stop losses, or confirm your trade by going to the downside targets. It's only for those who are taking the short-term trades that something can eventually be done, but it's going to be done out of the futures contracts, and in them I think that something is tradable. We're going to highlight those areas very quickly because I've done this for the users in France as well, so let's do it for the international purposes. I think that what we have in here is prices trying and reaching out to here, the trend support. All right, to me there's no trend, which means we're probably going to break this to just reverse this channel, which means I want the prices to break through the 1 hour context. All right, as we can see, prices are diverging. We've made new lows, but not the momentum. So I kind of suggest this is the kind of divergence we generally lateralize, which means we need to retrace up to neutrality in terms of momentum. That neutrality is 0. So we need to get at 0 first, and then normally if we're still below resistance, this resistance is probably going to be sold to push to new lows. The support I think are going to be bought this week are these ones, the ones we were trading the previous weeks in this area. So let's call this an area, all right? But I would say 2770 is the area in which probably we can expect the bears to partially profit take. Those who are short-term trading 1 hour and 4 hour reversals, they're probably going to lock on the gains in here, as this is their targets. And this is where I'll probably do as well. I'm not going to take 50% off the table, definitely not. I'm trading the daily and weekly scenarios as well, so I'm probably just going to take a 15% profit take, 25 at best, probably just no more than that. It's just to lock on my gains and have some cash available to reinforce. Because if I do nothing, I cannot reinforce. I'm already maximum leverage. So if I don't partial profit take, I have no reinforcement to make. As I do want to do some reinforcements, I'll partial profit take. But as I said, if you take more than 25% off the table, you're just going to do it wrong. Because if the market goes straight line to the downside, and if we find no support in here, which is freaking fucking possible, because once again, remember what happened back then in here with the G20. I got caught in that shit because I thought about managing my risk to just sell at better prices, and it happened. I got fucked and had to break out trade afterwards. So I don't want to make the same mistake again by profit taking too much on support areas, because I think pullbacks could be a play. I still think pullbacks could be a play on the week to come. But as I don't know, I want to be bearish because straight line is also an option, and you don't want to miss that shot if it happens. As I said, it's probably the big short entry. So if this is the big short, I think we could spend some time in here to make a real shit lot of accumulation, bring in a lot of bears to make sure that there is going to be no pullbacks in there afterwards. I mean, we lock on the bears, so as we start, there's no pullback afterwards. That's an option. But we could also say, okay, bears are already in, no one is buying, let's fuck up supports. It's as simple as that. I don't know. All I can tell is I can give you my sentiment, and my sentiment has to be technically confirmed. So far, I just don't know. All I can tell is probably this 27.7 area that is going to make the decision. In here, either the bulls are showing up and we do have some pullbacks, or the bulls shows up, no one gives a shit, we break through, and if we do break through, I see no other support area below 26.70, which is 100-point lower, which means we could fuck up 3% straight line just like that, just at the beginning of the week. We're trading higher fucking high in some kind of extended wedge structure, alright? Let's figure out that we could very well do something like that, and it wouldn't even be a surprise to me. So going in here, upon signal only, 1 hour chart signal, I'll eventually lock on some partial gains, but if we fuck it up in a straight line to go 28.80 or 26.80, don't be fucking surprised. That's expectable, that's very possible, and that wouldn't even be abnormal. Alright, to get to this area and buy below this support. Get down this area and break this shit. Alright, getting in there, it's a key level, alright, and consider a first profit taking in this area, alright. So it's either going to be there or there to me to support this week. Am I going to sell? Or do I expect higher highs? I don't. So I think this is looking at any pullbacks that will be reliable to target those areas. All right. So anything that pulls back, I'm going to be buying. I'm going to be selling this. All right, and targeting those targets. All right. So for now, I'm not selling anything. I'm already max leverage. So as long as we don't get to my first target area, I do nothing but just waiting for prices to get there. On the Eurozone perspective, let's have a look at the cash markets. All right, so let's have a look at the DAX. Normally, we should look at the Euro stocks, so let's do this. All right, the Euro stocks, how ugly this was. All right, even though it's been very fucking ugly and we do have a price signal, all right, it still remains a week that's been closing on top of the previous week's highs and broken the previous week's highs as well. So don't be over bearish regarding your area right now, especially in a broad perspective. It's when it comes down to Germany where things are a lot uglier. All right, in here we broke the highs, but we really made a strong bearish reversal with a bearish engulfing structure that's basically turning this thing from hope to panic, and we're reversing out of previous lows, which means it definitely is a 1, 2, 3, 4, 5 structure at play in here, suggesting new lows all along the way, which I was forecasting already for quite some time. So I think it's about to come. All right, so that doesn't mean Germany is going to bring the world down. It's just saying that Germany may be testing to make new lows. And what's going to come out of here, I don't know. All I can tell is that I target this support area to be the final target. So getting below 10,000s might be probable to come in the week ahead. We're weekly charts, so don't expect this to be played by 2 weeks. It can take up to 1-2 quarters to get there. All right. I'm not going to analyze NASDAQ and all that shit, but I mean, if we want to do this, then this is how it looks like. I mean, under resistance, we're trying to go as crazy fucking stupid as we could be. We're failing right into that resistance to the point, and anytime we're going to exit that red area, and I think that's probably going to come either the week to come or the next one, but I very well expect that we're going to have a strong reversal in here. It's going to be probably a morning star, an evening star reversal, bullish, hesitating, bearish to come this week. I mean, with the apples and things like that could just be falling like knives. If they do, obviously the NASDAQ will fall apart. And have a look at this structure. We've retraced up to the fucking previous top, which means in here, this is the worst case scenario. I mean, everybody thinks we're going to hold on to valuation. Those valuations can't hold on. Why? Because of this. This is a fucking bubble. If you think this is just gonna be hold in here and be nice, you're fucking wrong. Those kinds of prices cannot end well. So we're hesitating, which means we're losing momentum. When we lose momentum after bubbles, we crash those things. That's always has been the case. What we had in here is a goddamn dead cat bounce. It's the 17K in Bitcoins. No one wants to sell, even though all the signals are red. Everybody should sell, but no one does. Because what? Because they think Apple is going to go higher, just like it rebounds. No, they all gonna fail and break supports, which means we're going to go down, and it makes sense, and you can sell that shit with a stop to historical highs. I stand for this, even though how crazy it has been last week for the techs. It's bad, and it really looks bad, and it probably is going to be even worse in the weeks to come. And as it will start to deteriorate, people who are in those shitty assets will sell them as they go down. Remember that those who hold the valuation in here for the tech stocks is probably most likely the guys who've been shitty buying them into ETFs, loaded up with shit tons of them. So all the Apples, all the Microsofts, all those shits, the Googles, the Netflix, the Amazon, all of that is fully loaded in those ETFs. Some guys have been buying leveraged ETFs, so anytime they'll sell fucking hard, and you know that retail traders are generally selling when the prices are dropping 20 to 30%. That's when they start selling. So just wait for this to play its game. Look at the goddamn NASDAQ. If we just lose 20%, oh shit, if we just lose 20, 30%, we're going to get there, all right? And this is where people will start panicking, all right? No, it's off the market top. So off the market top, because this is where they've been buying. They bought all those shits to historical highs, and they're going to suffer a shitty pain trade. So 20, 25% when we're going to get to those support and break it down, probably price will surge to the downside. You'll have market news all over, you're going to have market all over the daily news. And whenever people will talk about that, people will start panic as they will be losing shit ton of money. They'll say, okay, we've been trapped. It's been a trick. Oh, God damn it. It's a scam. So they're just going to sell their fucking stock. And they're going to sell it whenever the prices will go down, because they don't give a shit about selling on supports. They're not doing this rationally. They've been buying because they thought people would buy it as well, so they could sell them higher prices. It's simple as that. It's just like with the Bitcoins back then. People weren't rational. They weren't buying Bitcoins because they thought about a future change to the major economy. No, they just thought about buying that shit to sell it higher. So it's exactly how it's been happening for the stocks. People thought the stocks will surge. Now they're going down. When they'll figure it out, they'll just sell it with huge losses, because that's what happens every fucking cycle ending. So do you think it's going to be different? God knows. Anytime I see people telling me, yeah, you know, Phil, this time it's different. People may be buying for good reasons. I mean, shit, I don't believe that. Anytime I hear that stuff, it's always ending the same. So I'm not saying it will obviously happen, but all I'm saying is I know what I have to do. I'm selling my shit to whoever wants to buy that. And if we break supports, I'm going to double down on my sellings, because I'll know that some people will have to sell even harder without making it rational. And when they'll sell, this is where I'll buy. That's simple as that. So in the NASDAQ, I think this is where we're going. At least this area, and when we'll get there, things will start to be nasty, and this is where we're going to have Apple falling like shit. And at that point, like I said, Apple has been buying share buyback a shit amount of time, and there are some articles suggesting they have been buying historical levels last weeks. So they've been increasing something that was already out of any standards. I mean, so. And you know how it happens when you buy back stocks at a market top. It is not that you have confidence in the future. It just says that you're going to increase the bearish reversal volatility. So you can expect Apple to fall like shit, like straight line, because this is what they've been doing with those share buybacks. They've been pushing prices higher for bad reasons, and when it's going to go down, it's going to be more volatile. So expect some dangers out of Apple. You can be damn sure I've been selling this shit last week, and I'm going to double down if we break down supports. Not for now, I still remain speculative, but I've got into Apple last week, and I will probably as well in the weeks to come if this thing starts to reverse. Normally, this thing is just like the Bitcoin. As it will start reversing to the downside, more people are going to catch interest into selling, very less people into buying, which means we're going to slowly but steadily gain momentum to the upside, to the downside. So I forecast, first we double this area. So you take this, you pull it down, all right, and it gives us, and it pushes back up to the previous supports below 5K. This is where below, and I think we're going to go there. I mean, in this area, to me, this is where the target area is for the Nasdaq. So is this thing going to crash? I definitely say yes. I've been saying this for 2 years, and I was clear since the first day. The day we're going to lose momentum is the day this thing we're going to crash. This thing is going to crash. So now we've lost the momentum. We broke down. Did I change my mind? Not a goddamn thing. I was forecasting this thing to collapse. Now that we have signs it will, why would I change my mind? I'm definitely selling the goddamn Nasdaq. All right? Simple as that. So what we had last week is a very dangerous signal that the bears are getting the momentum. And the bulls are losing it. And when the bulls lose the momentum in that structure, it's the goddamn dead cat bounce. The standard dead cat bounce goes to 61 to 76% Fibonacci, so we should have reversed in this area. But I mean, we needed the magic. So share buybacks might have just been rising the interest in here. So instead of 61 to 76 odds, we've gone 76 to 85.4. But we've just shifted to the higher level. If we fail in here, it's just the same old shit, which means dead cat bounce. We just fall again, and the prices are accelerating to the downside this time, which means this one was brutal and radical. No one saw this coming but the speculators like me. And the second one, first, the speculator will see this, but the trend traders will join the game, which means this wave is going to be less vertical. It's going to be, but it's going to be longer as well. All right. Generally, I give you odds. All right, the timings, and we're going to take. Let's do it. It's going to be today's educational content. Let's take the Bitcoins and let's jump daily so you'll see what I mean. All right. So every bubble. I'm not saying the Nasdaq will just crash like the Bitcoin. What I'm saying is that the structure is generally similar. The structures. All right. The structures and the cycles. So in here we've gone down in there. All right. Oh shit. That's not what I want. All right. This is how we've gone down. So. All right, this is how much it took. Just a few days to fuck it up. All right, that's the first bearish impulse. Now let's have a look. After the 17K selling, just have a look at how long it took. No, wait, that's not what I want. Give me this. All right, let's have a look at how long it took. So it's not 2, it's not 3. Let's go more than that. 5 times, 6 times. Oh, 6 times. So after the first drop, when we pull back to dead cat bounce, all right, the next wave, the wave that follows, the wave that breaks down supports and installs the bearish trend sentiment and goes straight to fear and panic sellings. And when panic shows up, this is where you buy out. But there is going to be panic selling at the end of that movement. It's going to be vertical dropping. And when you see this, you know all the retailers are selling. Get the buy their shit out. All right, so 6 times in approximate level. Doesn't mean it's going to be 6 times, but it gives us an appropriate an average timing. Now let's go back to our shit in the Nasdaq. So let's stick to the cash market. But I mean, no, I'm gonna do this in here. So now, first wave. Imagine that we might go bearish for average 6 times that shit. All right. What timing does that give us? Oh shit, that's long. We could be bearishly falling until August 2020. So next year's summer. A full year of bearishness could be coming in the Nasdaq. And if you just have a look at this in a weekly chart perspective, like I said, we should go panic selling area. Now, let's go back to Bitcoins again so you get to understand how this thing works, all right? Let's have a look at the daily. Where does the panic show up? The panic shows up when you retrace up to that support area. This is where price accelerate, but they're generally buying support. All right, so NASDAQ, weekly, and we transpose those informations. Where's the support? It's here. All right, so this is where we're probably going to go. Not going to break it, but we're going to target this area. All right, so this area is probably going to be the final target to me, where we're going to have panic, irrational selling out of a support area. So definitely is where you're going to buy your shit out and get the hell with your profits out of selling, and eventually even buying and reversing for the most aggressive ones of us, obviously me included. So now you've got an approximate timing, an area to trade, and you'll see what the trend may look like. All right, just like this and this. All right. Is it going to be panic selling just by tomorrow? No. Is this the kind of trade you just get in and think you're going to get the money by 2 weeks? No, it's not going to be like that. It's something you take and fucking hold. And it can take up to a year to get to the target area. All right? Are we clear on this? So have a mindset. I'm not saying this is how it's going to play, but if you just take things from point A, from asset A and just replicate it on asset B, just use cycles and averaging, all right? So what we're having here is an approximate target area with an approximate timing to get there. That doesn't mean we're going to explicitly go there on the 3rd of August and we're going to explicitly get to 4,800. It's just as the structure is a crashing structure, probably, this is what we can forecast to be the most probable. Obviously, in the meantime, we'll have additional information that will give us more precision regarding the target, more precision giving the timing. But as for now, we've got nothing. We just need to project out of structures. This has got them patterns. Just contextualize the market, use the patterns that happen on other markets, and try to project on this one. That's what I do. That's my fucking job. I don't know. I'm just projecting probabilities, and this is what seems to be the most probable, because I think this market is just about to crash, simply as that. That doesn't mean the assets in this NASDAQ 100 are just going to disappear. They won't. They will just lose a shit ton of money because they've been accumulating a shit ton of money that doesn't even rely to reality. So why would this be rational? This has been irrational. This will be as well. So you can probably sell Apple even if they have a good news. They're going to be having some event today. Even if this event is gorgeous and gives you like the idea that you should buy that shit, just don't. Just sell it because it's probably what's going to happen even if it makes no sense. All right, moving on. So we've got all the stuff to cover. First of all, we've got to talk about, this. In a swing perspective, this is definitely something. So the German bunds have been reversing negative yielding. The question is, how long can this be held? Is this just an excessive price, just like it's been done with the US? I think it is. So I'm still selling the 10 years bonds, the bunds. Because I think this is the most interesting area to be selling, but I'm not selling like a crazy, all right? I just don't know, but I think it's just the market is dipping a toe in here in absolute irrational pricing area just to see how prices will react. So it's kind of the market is testing reactions in here. I'm not even getting out of my bunds because I don't really think this is rational. So it's just like the last time, the last sessions in the US, I think it's the market going there to try having some reaction, some emotional reaction. I'm definitely not reacting to that thing. So I'm still selling the bunds. I don't give a shit about going negative rates. It's just for dumps to talk with it. So I'm patiently waiting for my bunds to pay in return. The quarter expiration is there, and I definitely stand. I don't think this is the area we're going down to. I think this is just making people believe it is to just go all the way up to this area pretty rapidly. So that's how I think it is. So I'm still bullish in yields in the euro area. But that doesn't mean I'm going to be bullish in the 10-year yields in the US. Most likely, I think the US will just stabilize where the euro area would catch up on those problems. WTI, we've got to talk about that shit. So let's have a look at the weekly charts first. All right, what we have is an upward shadow candle, but don't be overexcited. That doesn't mean this market has surrendered yet. It could be if we do have a bearish week to come, and I think it's probable. I think it's probably I definitely think it's the most probable, by the way. But could we just have kind of a worse timing, wrong timing kind of scenario to come? It's possible as well. So take that in a risk management. I would say if you're bearish in here, and I am, we've got the good choice. I think we've got the most probable, but does that mean we won the battle? Not yet. Not at all. So where to put the stop loss is the actual question. What do we take as a risk management? What is going to look like if it is an invalidation? So I would say going higher is possible in a daily chart. Definitely possible. Grinding a little bit higher, just like we look at the momentums. Momentum is bullish. Yes, it's overbought. The cycle is terminated, so we should have some bears showing up, showing that the most probable in a technical perspective is bearish. But we're talking about the goddamn oil. You know, that thing isn't about being rational. It's kind of, let's see how fucking far we could go before that. So I would say the level of uncertainty, and remember what we said the other day, a strategy is more likely assessing what are the odds for bullish, bearish, or neutral, which means prices to go higher, prices to go lower, or prices to stay in the current area. But there is a fourth parameter. The fourth parameter is just fucking chaos, in which nothing makes sense. And price may go higher, then lower, and higher, and lower, and stay in price. And this is what you call risk fucking management. And chaos in here is definitely important in this strategy, in this context. So as the level of chaos is as high as it could be, it means your stop losses must be accordingly set further away from the current prices, not to be caught with chaos, because price could go down, as I think they could be, but before they do, they could be just a shape of chaos before they actually reverse, which means it could look like an upside move, which is just fucking chaos and is not a market that will move forward and continue higher afterwards. All right, therefore, I tend to say stop losses is minimum 62.80 for this context. If you're trading this area as a bear, make sure your stop losses remain in those area and no further and no closer than that. If you trade closer than that, I think you're just at risk to be caught with chaos. Prices just trying to go there, fucking the dumb stop losses, and then afterwards prove right. So if you're, the goal in trading is not to be proven right or wrong. The goal is to take goddamn money. So if you're right, just make sure you won't be proven wrong in between. And what generally is going to prove you wrong is not necessarily that your decision making was wrong, but just you haven't let enough room for chaos. It's just that I'm teaching you guys. How do you risk manage out of something that is freaking unpredictable? That doesn't mean the market is unpredictable out of a few cycles, just that in the short term, the market is unpredictable. It always is. So you don't know what prices will do on the following days. All I can tell is that in a statistical perspective, day after day, odds are for us to get to this area more than this one. That's all I can tell. So do I trade and then I risk manage? The higher the risk, the further away the fucking stop loss must be set. The shorter the risk, which means the higher quality the signals will be, the more aggressive I will be. What I have in front of me definitely not means to be aggressive, but most likely to be really cautious. But we do have odds that suggest more bearishness is expected in here than more bullishness. All right, sorry. So keep on going. Now the euro dollar, which is going to be one of the most interesting assets for the weeks to come, not necessarily just that week, because last week was pretty important though. As we can see, we do have a signal in here, but prices and momentum are converging right now, which means prices are following the momentum, which means we had high highs and lower lows, which is kind of dangerous because it means the prices are oscillating. As you can see, we're oscillating in between the trend channel, which means the trend is about to emerge. It's hard to say if it's going to be bullish or bearish. You know, I've been making a video dedicated to this one, showing you the reasons why I tend to believe that most people may think it's going to be bearish for fundamental reasons, even though I think the correlation is about to reverse because the inflow and outflows are about to reverse in the stock market, probably leading some market destructions in terms of value in the dollar, which is probably going to lead the dollar to fall further and faster than the euro, which is probably going to drive the euro dollar to the upside this time. I could be right, could be wrong, future will tell. All I can tell you is that anytime we're going to break this bearish signal, which means in terms of strength, this is kind of trend following. So it means if we break down the support, I'll surrender once and for all. I'm not going to accept euro dollar to go lower than that. So it's definitely a stop loss to me if we go lower there. But if we don't, it's most likely the exit is going to take over. And in a balanced perspective, I'm pretty much say that the double exit we've got in here is way stronger than the resistance we've got there. So I would suggest anytime we break this is where we're going to trend bullish. This is what I favor. I need to pick a side and I need to stand for this. If I'm wrong, I'm just wrong. If I'm right, I'm going to have good prices in the speculating area ready to trend. So I'm buying any pullbacks we have. I've been buying euro dollar later last week. I'm still doing. As you can see in here, the cycle is bullish and we do have some room to work the upside, and I would like the momentum and prices to build an upside move. GBP USD, hard to figure out the goddamn shit out of this. It's hesitating, but last week is pretty great. At some point, we had lower shadow 2 weeks ago, bullish week, opening near the lows, closing at the high. This week has a bullish bias, I would say. But the momentum doesn't give us a single information, as in here we do have momentum contradictions. We've gone higher in here, but the momentum didn't. So we're contracting in some sort of triangle, as in here we're having some kind of wedge structure, okay? We have higher highs and lower highs as well, but both contracting. So I would suggest, in this perspective, to me, GBP USD is clearly having a very interesting structure in the 4-hour chart time frame, in which we might be heading toward breakups. Because that structures, and I teach you about them, is when we've got high lows, all right, in here, okay, major lows out of context. I mean, in here we just barely got in context, but I still tend to suggest this is higher lows, all right? And then you should have price reaching out to resistance, pull back into trend channel, and the trend channel pushing prices, which means prices are oscillating in the trend channel in here instead of oscillating between context. So this is generally early signs of trends, and as we do have high lows, it means breakups are possible in here. That doesn't mean they're going to happen. All it means is that if we do get to resistances, they're mature enough to break. I thought we would be breaking in here, at least we could have. We just tried, and just triggering the stop losses wasn't enough. We just triggered the stop loss, but we had no bulls breaking through. But the difference is, back then, all right, we were still pretty immature regarding the Brexit votes and everything like that. So uncertainty was surrounding at that time. Now we kind of feel that anyway, even if it's bad, it's already in the price. So I would say even the worst case scenario isn't that bad. So it isn't going to impact prices that much. There's always the case for a worst case scenario, and even worse than what we've been anticipating. But at some point, we kind of anticipate that just nothing is going to be dealt with, but it's going to be done through time. So we're probably going to have a intermediate deal, not a soft deal, not a hard deal. Kind of, we're going to save us some time for the hardest part of the deal, but we're going to have to deal with the first consequences immediately, like population migrations and that kind of stuff will probably be set instantly. But then, regarding the commercial problems, we're going to have to deal with the easy ones, which means we're probably going to have to set some tariffs for some goods. But for the easy things, when it's going to get complex is where probably UK and EU will say, okay, this is too complex to figure out in just a week and with a simple number. So we're just going to forecast that this thing will keep on behaving like the way it was before, but we're going to have to find new rules and define new rules. This is probably how it's going to happen. So it's not a soft deal, it's not a hard deal, it's an in-between stuff that I think is going to happen. So anyway, I think we've been pricing the worst case scenario. So even the average scenario is probably going to give us some upside, kind of a breathe in, breathe out stuff. We kind of digested that stuff at that point, and I suggest upside is about to come. Not just about GBP, but I think anyway the dollar is impactful in here, and I think the bearish dollar impact is going to overcome any fucking thing in the forex market, which means euro will be surging, not because it's strong, just because the dollar is freaking weaker than ever. So I think it may have the same effects on GBP. GBP going there, probably hardly going to find some buyers, some sellers, which means probably the dollar will be sold against every other currency. It's going to be GBP, Euro, GPY. I think USD is just about to be the weakest currency in the weeks ahead. It's just something that will set itself. I'm not saying it's going to be a straight line, could be some pullbacks in between. But I tend to believe that the dollar is just pullbacking once and for all. We'll pull backing in there, could be heading to this area for the week ahead, but anytime we catch up with this trend channel, I suggest the bearishness will show up and probably expecting the final burst to show up, the trend to trigger. I'm now ready for breakout trades, but like I told you guys, we're fucking up the trend channel. I want to see it reacting in this area instead of getting to the context. If we get back to context, I'll give away my stop loss and eventually have to change my mind. But I think right now we're mature enough to find some bears in this area and then head back to support area, support context. Just watch out for the 4-hour chart in the weeks to come. Getting in there, probably bears. Getting in here is where we're going to break out trade. Validating the scenario, getting to leverage trading. I'm already doing this, which means USD GPY, I'm already reinforcing any pullback we're doing. Just waiting for more interesting prices in the short term. Regarding stocks themselves, oh no, god damn it, we need to talk about AUDNZD. Not even letting this one aside. So AUDNZD, we're straight into this area. I never thought this would be a thing back then. I mean, when this thing happened, when we were early January, I would never have imagined such thing would happen. I really thought this was just an odd event, something that didn't even make sense. And what I care about right now is that in a monthly perspective, we don't get below this low because we must not. And that's what I said. I mean, this is how far I'm ready to go. We've broken through this because of this stupid event, but apparently the market wants to retest every support in this goddamn bearish candle. So I would suggest we've gone as far as we could. In the daily perspective, I'm still goddamn hoping to have a freaking bullish engulfing structure. So it could be coming by tomorrow. And guess what? Tomorrow is the RBNZ. So tomorrow is a huge catalyst for New Zealand dollar. So let's have a look at not just AUDNZD, but probably NZD-USD, which I think is the most important thing in here. How the market behaves ahead of the RBNZ. Two options, either RBNZ is breaking through that resistance, and in that perspective, this is the worst case scenario for me. It means the market has gone to context, pull back to trend channel, and now trend channel is pulling us back to the resistance context with higher lows. All right. Normally we should have higher lows from the context. This is why it leads me to believe that we're going to do this before having a bullish NZD. All right, which is a freaking fucking drop. Once again, this drop is significant. It's a 5% drop, which means we could have bullish AUD and bearish NZD for a few months. And this is what I think is about to come. I think NZD is probably react bearish in the next following days, and I think AUD has already done that. All right, which means AUD is worst case scenario already. We're in support areas in there where we're resistance area in the daily charts, and it's even for the weeklies. So it's a binary choice. I don't know. It's regarding the catalyst that will show up, but in a technical perspective, I see more odds to the downside for NZD, and I hope it's going to be bringing up that goddamn AUDNZD out of very dangerous area. It can be volatile, so please don't put a goddamn stop loss close from the current price. I stand the stop loss. My stop losses remain at 0.23. Remember the previous days? I've been taking an entry right in here, and I got stopped out at break even for that reinforcement last week. So I got in and out at the same price, and I'm waiting for further informations to go in again and start reinforcing, because right now I would like to take an additional trade. But if I can't, then it's just going to be a breakout trade. So I'm just going to wait. And anytime we're going to get to resistances, I'm going to buy. But the thing is that I think the catalyst, the tomorrow's catalyst, is probably just going to do this. All right, which is going to surge out of this area, which means if you don't anticipate, then you're probably going to not be able to break out trade. So what I'm doing is I'm looking at early signals right now. Unfortunately, I don't have. All right, so which means it's 4-hour chart trading in here, not 1 hour. But in here, I do have the signal is not enough for me to press the button. All right, I could be buying. And I should do, to be honest. I really should. But I think it's too risky. I'd rather like to have my stop loss set in there than buying and putting it down the bottom, right? So I think it's not enough for me to rise my stop loss, because the goal in here is, if I didn't had any trade opened in here yet, I would definitely buy this. That would be more than enough for me to trigger the trade entry. But as I do already have a lot of volume in that sector, in that asset, the question is, am I ready to put my stop loss closure? And to this, the answer remains clearly no. I can't put my stop loss for closer, as it would be too risky facing that catalyst. I'd rather like to have lower leverage than having too much risk taken. All right? Now regarding Tesla, this is where I think the worst possible case scenarios are showing up. Look at the weekly close on Tesla. So we're about to make one of the lowest closes for years. And I think this is about to trigger the worst case scenario. Now, I let you just a few seconds. Watch out for technicals, all right? Just do the usual jobs. You look at where prices are. We're back into support context in here. There is no trend, as the trend channel is basically as wide as the context channel, so it's definitely a range. How mature is that range? 1, 2, 3, 4, 5. So it's pretty fucking range. It's pretty fucking mature. How are the tops reacting? They're lower, which means we can break our trade. Now you get to have a look at the momentum. How is the momentum? It's bearish as well, which means we've been breaking two new lows in momentum. And do you think prices will do accordingly? I freaking say yes. Now have a look at other additional informations. I give you a few seconds to think. Have a look at this. This is exactly what I wanted. Triggered last week and closed. We do have a sine wave breakdown, which means sine wave is detecting a change in the cyclical behavior of the prices. That's great. That means the bulls aren't supporting anymore. We've got volume. We've got candles closing at the lows. We've got accelerating prices probably to come for the weeks ahead. So maybe not just this week, but I would tend to believe that I'm ready to put down my stop losses in here. So I'm ready to break out trade. Not just right now, just not on Monday, but I will definitely trigger some breakout trades out of Teslas in the days to come. Because I think anytime we just close through the trend channel in here, which we did on Friday, but kind of I didn't want to sell right on Friday and sell over week. But most likely, I think anyway, I'm going to sell Tesla in the days to come, because I think an accelerating price both through trend channel and context. Once again, remove the prices. When you have this and prices there, with that kind of momentum and that kind of context, the most probable is just bam, we fuck it up, and then we're going to have to look for buyers, and they won't be any until we get to 180. Right? First buyers are going to be 200, 180. This is where, as bears, you will start profit taking slowly but steadily. All right? That's how I see things. Now let's talk about the goddamn Apple. What to do with that shit? As last week has been pretty significantly bearish, reversing in a technical area. And what are the odds for us to go a little bit higher? There's a possibility, because we do have the 61 Fibonacci right on top of us. Remember that usually dead cat bounces do pull back up to 61 to 76. What I would tend to believe in here is that we've done it. We can clearly see the two sets of waves. So any bearish signal right now just triggers the crash. I don't know if this is enough, but I would say last week definitely rose some red flag. So I wanted to be in, and like I said, I sold right in here, and seeing that we were closing at the high, I said, okay, I'm just closing 50% just to put the stop loss further away. So my stop loss remained there, all right? Firstly, it was there. I put my stop loss at 206. So I decided to close 50% of my selling entries to put it back to 2016. To 216. And I think it must remain in this area, all right? Because we could, for some reason, find some gas to go there. I don't know. Apple is going to have a show today. I don't know how market will react to this show. Either it's going to be just selling, and I would be happy to have sold last week. and we just go straight line bearish and prices will deteriorate and trigger the crash, just like we said about the Nasdaq. Or we find some gas, short-term gas, indices rebounds and go search for resistances, and Apple could be a gainer today. I don't goddamn know. All I know is that it's a little bit too risky to be really aggressive in here. We could try to trade this area, but if we don't, just zoom the fuck out of here. This is the last resistance we had. We failed below it. So if we just have a bearish week, don't come cry to me. We had to sell. You knew it would be probable. We just sell. Just goddamn look at this. Last week is a selling fucking signal. It happens at the middle of nowhere because the weekly chart is way too volatile and even sine wave cannot follow this up. So I would say in a daily perspective, we goddamn sell this shit. Even if it's close to the actual trading area, I would say it's close enough. But you just take the risk management with a wide stop loss to accept some chaos in this area if we decide to go trade that. But I would say you need to be bearish on Apple. My short prices has been significantly rose. Last time I sold in here, I definitely sold with much more leverage in here, which means I have an average price of 192 today. I'm already positive in Apple as we speak. So it's the forecom. Regarding Microsoft, am I going to sell? I would say that bearish engulfing structure is kind of a concern because once again, bam, stop triggered. That's great. I mean, in a bullish bubble perspective, this shouldn't be happening. We must not lose momentum in bubbles. Bubbles are about momentum, so when they lose, they burst. So the question is, have we lost it already? I'll say that stop pattern, definitely something I like to see. Is it enough to go back into trading this asset? As I just got stop triggered a few days ago, I would say no, not enough. All right. I would say wait for a weekly bearish engulfing confirmed by a candle close. So I would watch out for a trade to trigger on Microsoft by Friday evening close, not before. All right, so it's going to be a swing trade. Definitely it is. I've been turning it yellow color again because something must be done. But it must be done only if fulfilling the conditions on a weekly chart. I would say the daily chart, just don't give a shit about it. All right, we're oversold again, which means bearish engulfing in here in the context is definitely something to trade. But I need to confirm that goddamn trade before it. And I want the weekly candle close to confirm that. So wait for this. Because we could very well have a lower shadow candle. I mean, we break down this week, and for some goddamn reason, we rise at the end of that week, and we make a lower shadow candle. And if that's it, then that's the worst case scenario. It means we're hesitating between bullish and bearish. And in a bubble, hesitation is going to be profiting the bulls most likely. And I don't want to be just taking another selling entries on Microsoft to just be stopped out 2 days from now. So I'm waiting to be sure that this thing will fall like shit. When I'll be sure, I'll get back in. You can be damn sure I'm going to be selling this. I just don't want to take too much risk. I've already burned a bullet in here and triggered a bullet. I'm not going to fire the second one just a few days after because I've got early bearish signals. I want bearish confirmations. Same thing goes for Visa. It's exactly the same stuff. And regarding all other assets, I think it's pretty clear. I mean, just look at how it's been reacting. We've gone straight to my selling entries from Amazon. I didn't trigger the trade yet, but I should have. Let's be honest, I should have triggered this. So I'm probably going to sell some pullbacks on Amazon. We're exactly trading what I expect. The market is going down, pullbacking in 2 waves, right into the big selling area. I think this thing will crash. That doesn't mean Amazon will worth shit. It's just we're probably pulling back to 1,000, which is the last time prices were rational. So we're just erasing irrationality. Remember when we were at 1,000, it was already overpriced. We've added and doubled that shit in between. Yes, Apple is definitely be something. Amazon is definitely something I'm going to buy for the next economic cycle. But do I want to buy that shit for 3,000s? Definitely not. All right, it's simple as that. Regarding Boeing, I think even if they fix the shit with their planes, nothing is going to save them. It's just why? Because we've been pretty fucking stupidly trading. Even if we turn it back to rational in terms of plane problems, it's not going to solve this. The problem is already there, and the problem is not about the planes. The problem is about the price structure. And when such price structure starts to collapse, it's not going to stop. It's like dominoes. We've been failing. The first dominoes have fallen, and we cannot stop the rest to fall as well. So just let it go until the pyramid scheme just exhausts itself. When you see panic selling, you know it's time to buy yourself out of that shit. But we're pretty fucking far from the panic selling areas. I think panic sellings are in here, and this is where you're gonna have to get yourself out. So regarding the current prices, that's a 40% drop, and I expect this is what's about to come. All right, that's it for stocks. That's it for swing trades. So watch out for AUDNZD. That's my top-notch scenario for the week to come. Watch out for the dollar pullbacks on the DXY to just sell that shit. I would say watch out for USD/JPY as well as a euro dollar. They are both probably going to give daily signals or 4-hour signals near their trend channels, and aggressive traders might want to take those trades with a stop loss on top of the previous highs. All right. WTI, I suggest you cautiously stand by for additional information to come by the next weekly close. Aggressive traders can try to get their shits on this, but I won't be risking this myself as I'm already in, so I'm just waiting. That's it, and I'm watching for the bunds. I'm watching how the bond market and the euro bond market will react in the following days, because I would like to see some signs of indecision and pulling back out of the bunds, turning into negative rates. I want them to return positive and reverse brutally. I want to see a difference between the US bond and the European bond. I want to see the goddamn spread narrowing. For a simple reason. I mean, if you take the DE, let's finish on this. All right, let's take the US 10 yield minus the DE 10 yield. This is what it looks like. All right, so let's have a look in the weekly perspective. So we are starting. All right, this is the key element. We're starting the reverse. I mean, we can't trade that directly, but bond traders will definitely trade that, which means it's a spread chart. So what they're probably going to do is that they're going to buy 10-year yields in the euro area, and they're going to sell it in the US. All right, which means this is going to narrow the spread. All right, it's going to be a spread betting. People will bet that the US has to fall in terms of yieldings because people will get to safe haven in the US, and I definitely stand that this is the most rational thing to do. But they'll say, okay, euro area is already priced in the worst case scenario, so if we need some weak and strong to play a spread chart, it's definitely going to be euro area versus dollar. Which means this is probably what's going to drive euro dollar to the upside as well. We're going to bring in capital in the euro in the safe havens, and dollar will just fall like shit. Because dollar will accumulate in safe haven, and euro will attract risky capital instead. All right, so that's what I think. All right, so you may expect junk bonds to just fall like hell, and this is something I'm definitely going to watch out for. That's the last thing we're going to talk about. So junk bonds have been reversing in the expected area, everything like that. So watch out for this. I think junk bonds are the worst problems, really where Wall Street needs to be cautiously warning. I'm really, really interested to see how they will trade today, because we could have stocks hesitating, but I don't want to see junk bonds hesitating. To me, junk bonds have gone way too far. I want them to pull back to support and probably just activate the divergence immediately. All right. This is definitely a signal to trade. I mean, in a daily perspective, we're divergence, we're overcoming context, we got price signals. So yes, this is something to trade. Remember what we said out of this profit taking. We said profit taking, so you must allow the market to eventually try pushing higher. We did. We failed to break the resistance. We're going down. We have price confirmation. Normally prices should go down, validate the divergence, and then reverse. So we'll see about that, but watch out for junk bonds in the following days. All right, that's it. Bye, guys. Wish you a good week. Trade really safe. It's going to be an important week, but not necessarily going to be trending. It could be, all right, like I said, if we trend, it's probably to validate last week's signal. If we just hesitate and kind of range a bit, which could be normal in here, it's just going to be to digest last week, but we're probably going to maintain last week's resistance, but just kind of trying to build some supports.